Buying a house is already one of the most stressful things you will probably ever do in your entire life. And if you're self-employed, it can get infinitely more complicated, especially if you're writing off a bunch of things on your tax returns or you have a gig job. Tax returns don't always accurately show how much money you make. A traditional lender is going to use those tax returns to calculate your income, but if you don't show any income on your tax returns, then they're going to deny you. But there is hope. There is a great program out there, a bank statement loan, and it's going to help you get a loan if you're self-employed. My name is Jonathan. I am a loan officer in the state of Florida, and let's talk about this bank statement program. If you like this type of video, make sure you hit that subscribe button and the notification bell so you get notified anytime I put out a new video. And if you liked this one, make sure you hit that thumbs up button. Bank statement loans. Who are they for and how do they work? Well, a bank statement loan is for a borrower who does not fit into the qualified mortgage box or conventional mortgage box with their income. These people are self-employed or they are like a 1099 contract employee, and their income just includes a lot of write-offs. And so a typical mortgage, which we would use 12 or 24 months tax returns, is going to show that you have either no income or very little income, or you're taking a massive loss. And yet your bank statements show that you actually make really good money with this business. Those are things set up by your tax professional. So if you have questions on that kind of stuff, I would definitely consult with one of those. But for mortgage purposes, we can talk about that. A qualified mortgage is a mortgage that fits into Fannie Mae or Freddie Mac's box of conventional loan guidelines. We have a specific way to qualify or to calculate qualified income. And for self-employed borrowers, that would be getting 12 or 24 months bank statements and dividing that by 12 or 24 months, minusing some expenses, and then you've got your monthly qualified income. But if you take a bunch of write-offs, or maybe you reinvested a bunch of your money that you made back into the business, your tax returns are not going to show that you made a whole lot of money. So you're going to use your bank statements in order to do that. We would call this a non-QM or non-qualified mortgage, not because you don't qualify for a mortgage, but because you don't fit into the bucket of Fannie Mae or Freddie Mac's guidelines, loan guidelines. And so you get a non-qualified mortgage product, non-QM. These bank statement loans can be really helpful for people who are looking to buy a house, but they do take a lot more work. And so one of the things that we would suggest is definitely go into it with a lot of patience. This program is very detailed and takes a lot of work to figure out what it is you can actually qualify for. And there's a lot of T's that needs to get crossed and a lot of I's that need to get dotted. And so we're going to talk about a few documents that you are likely going to need that you want to have prepared ahead of time so that you can make the process as smooth as possible. Let's talk some documents that you might need to have prepared ahead of time for the bank statement loan. Of course, you're going to need bank statements. These mortgage companies that are doing these non-QM loans, these bank statement loans, are going to need 12 or 24 months of your personal or business bank statements. It's really important that you understand that you're not going to mix the two. If you have a better month in your personal business or your personal accounts versus your business, you cannot mingle the two accounts. You need to use either all 24 or 12 months in personal or all in business. Those come out to using different calculations to figure out your qualified income. The easiest one to use is to use your 12 months or 24 months of your personal bank statements. And you're going to figure out if it's 12 or 24 based on the lender that you talk to. They're going to have specific guidelines for the investor. That's the person who is going to be, or the company that's going to be footing the bill for your money to borrow. They're going to have those specific guidelines. So you want to make sure you've got 12, 24 months individual bank statements. You cannot get 24 months worth of transaction history. You need to have 12 or 24 different PDFs for every single month of those bank statements. That's super important and can be quite tedious of a process. So if you have those ahead of time, your lender is going to thank you, I promise. One of the other things is you're going to want to have an up-to-date profit and loss statement. That seems pretty standard, but it is going to be super helpful trying to figure out like a year-to-date income, and also making sure that your bank statements actually match up with what your P&L says. So those are two of the biggest things that you're going to need with a bank statement loan. And there's some other documents, and you might come up to needing letters of explanation to help with some of those deposits, because the lender is going to look at your deposits and see what's regular and ask about any kind of abnormalities in those. So let's say you took a big contract and you got a lump sum payment. Your lender is going to want an explanation on that larger deposit that they're seeing in your bank statement. If you're using your business bank statements, which is totally fine, the calculation is going to be a little bit different on how your lender figures out the qualified income. And if you want some of that information, I can give it to you. It's just really heady and is just probably not necessary for this type of video. So if you like calculations, I can totally give that to you. But if you don't, it's not necessarily important for you to understand. I would just make sure that you know that that they're going to look at these qualified deposits. It's not just going to be any kind of deposit. They're going to make sure that they kind of match up and are in line. The whole purpose for this loan is that basically saying like, you know what, I make about $30,000 every single month. You can't use we call it a stated income loan, and you can't do that anymore. That was kind of one of the problems with 2008, 2009, is that companies and people were saying, you know what, I make this much money, and they would do nothing to actually back that up. So bank statements provide a great avenue for people who don't use the same kind of tax information or take the same write-offs and stuff on their tax returns. So it's a good alternative for that. And like I said, kind of at the front end, really make sure you've got a lot of patience for this, because it's an arduous process, as most self-employed borrowers will find out. But because this is a non-QM product, program, there's a lot of things that need to be checked. A lot of T's and I's that needed to get crossed and dotted. So make sure you've got patience for it. If you have any questions, or maybe you want to share your experience with getting a non-QM loan, feel free to drop them below. Thanks for watching all the way to the end of the video. I really appreciate it and greatly appreciate your support. If you have any questions, comments, at any point, please feel free to give me a call, shoot me an email, whatever. And don't forget to like, comment, and subscribe. Thanks for watching.